Hey everyone, I hope you guys are having a great day. Today we're looking into Taiwan Semiconductor Manufacturing, TSM, and we're going to be analyzing the stock, looking at fundamentals to see if it's attractive at the current valuations. Now, the first thing I'd like to look at when I'm analyzing a stock is its growth potential. So here we have a breakdown. We can see that over the last year, the revenue has been increasing by 18.5% and the net income increased by about 15%. If we look at the graph, we can see that both of these increases over the years since 2011, they've been pretty consistent with each other. The compounded annual growth rate was about 13-14% for both the net income and the revenue, which is pretty good to see. Now we can see that earnings per share has also been increasing by 15.19%. The book value has been increasing, and tangible good value has also been increasing by about 17%. Now here there is the free cash flow has been decreasing, and so did the free cash flow per share. We're going to see the reason why, but it's mainly because of the heavy investment in the capex. While we're still talking about growth, it's important to look at the company's main clients. Here in our case, TSM's main clients are such as we can see here: Apple, MediaTek, NVDIA, AMD. These are good companies that they're big, they're known, and they're growing pretty fast. We can see the sales growth of the 3-year compounded annual growth. We can see that they're growing at a pretty fast rate. So if these companies are growing fast and they're TSM's main clients, these are going to be able to fuel TSM's revenue and sales, which is a good thing to see when we're looking at growth for the long term. Alright, so now we've looked at growth, let's look at profitability. So we can already see from the breakdown that the company is very profitable. We can already see from the gross margin at 51%, which is pretty good. Operating margin at 41%, very good. The net margin is also high at 37%, which is good. Free cash flow margin at 16.6%, which is good. And the free cash flow as a percentage of earnings at 44% average. The second thing I like to look at when I'm looking at profitability is to see what's happening with the net margin. Is it going up or down? So I pulled this graph here that goes till 2012, and we can see that the net margin has been growing and it's almost at its all-time highs, which is good to see that the company is increasing its revenues, still being profitable, and it's also increasing its net margin, which is very good to see. Alright guys, so earlier we showed that the free cash flow have been decreasing, and I just want to go more in depth in this aspect. So as we said, this is because of significant investment in property, plant, and equipment, and we can see it here. This is a graph that pulls from 2004 to 2021, and we can clearly see that in 2021, TSM's been investing really heavily in its capex, and we can see it from the formula here that free cash flow is operating cash flow minus capex, capital expenditure. And the reason why the free cash flow has been decreasing is, like we said, the capital expenditure has been increasing heavily. This is why it's pulling it down. So nothing really to worry about the fact that the free cash flows are decreasing. This is going back into the company, and if everything goes well, we can expect this to help increase or maintain the growth that the company is seeing. Let's now look at the financial health of the company. With the current ratio of 2.17, we can already say that TSM doesn't really have an issue paying off its short-term obligations, liabilities, which is a good thing to see. Second of all, if we look at the cash position in green, we can see that since 2007 to 2021, TSM's been having a really good cash position almost all these years. We can see that right now the total cash that they're having is $41 million, whereas their total debt is at $26 million. And this whole time they've already managed their cash to be higher than their total debt. For me, TSM has a really good balance sheet on that side. It can pay off its debt tomorrow if they want, and they would still have some cash left. So I don't have any red flags looking at the financial health. Another point here is that goodwill and intangible assets are only 0.72% of total assets, so most of their assets is tangible. The shares increasing is at 0%, which is good. The company is really not diluting. Now, on this aspect of dilution, here we can see in the cash flow statement that the stock-based compensation is really, really low, almost none, especially comparing it to the cash flow made by operations, which is also a good thing to see. So no dilution problem, and this is something I like as an investor. All right, as you guys know, I don't like to put too much weight on analysts' insight, but it's still good to just see what they're looking for and what are their estimates. So if we look at the price target, they're estimating on average the stock price to be about $154, which is about 41% upside. As for the revenue and the earnings per share, they're also expecting on average for the next 5 years for them to grow about 19.9% for the earnings per share. So they are expecting growth for the revenue and the earnings for the next 5 years for TSM, which is a good thing to see. We can see that most of the recommendations from the analysts are strong buy or buy, with only 3 with hold. Alright, let's now look at the valuation. So from 2015 to 2022, the average PE ratio has been around 19.22, and the price to free cash flow has been around 37.55. Now if we look at the graph below, we can see that in the recent years, the price to free cash flow and the PE has been both diverging from each other. The reason for this is, like we said, the company is investing more and more in its capex, which is dragging up the price to free cash flow ratio. Since the free cash flow is in the denominator, the ratio is going up. Now, for that reason, we can see that the PE has been more stable in the graph. So if we base ourselves more on the PE for this valuation, the current valuation of the PE right now is at 26. In that sense, we could see that it's a bit more overpriced than the average. Now, just keep in mind, we saw earlier a compounded growth rate of the sales for about 10 years of 15%. Okay, this is not really huge growth. So if I was to buy this stock or consider it, I would be looking more around the 20, closer to the 20 of PE. Now, keep in mind that the fact that a company reinvests so much in themselves can also open up more growth for the future. So that's also something to keep in mind. Nevertheless, the company is not too overvalued or too undervalued. It's near its fair value in my opinion. I would still be looking more towards closer to 20 PE. And that's my analysis for TSM. That was it for TSM. Thank you so much for watching. Please subscribe to support the channel if you enjoyed this content, and I'll see you on the next one.